Lower-end consumers are having a hard time making their car payments with the rising cost of cars and higher interest rates. Lower-end consumers are falling behind on their car payments, and the numbers are starting to get, well, a little bit scary. 14% of new cars that were sold to people had a credit score under 650. This is the highest percent going back 9 years to 2016.
Yeah, I mean, it looks like people are getting more in over their head as subprime loans that are 60 days or more overdue are at a record 6% this year. And I was blown away by this. The number of repossessed vehicles is also climbing to a record not seen in 16 years to an estimated 17.3 million repossessed vehicles.
That's a lot of vehicles. I saw that too. Like, wow, that's a lot.
Yeah, that's not good.
No.
Some consumers overbought a car probably due to a good salesperson and that new car smell that sometimes is hard to resist. I mean, it's very, I don't want to say easy to buy a new car because I bought that Suburban earlier this year and it's like, gosh, you're at the dealership for 3 hours and, it takes forever. And, actually that was, we went, we looked at it, then we came back and we bought it. So, I mean, it probably took about 6-7 hours when you factor in all that time there. But, I mean, it is easy to get excited around the car. And I think that's the problem. And people, they fall victim to, oh, well, it's just, X amount as a monthly payment. Right. Like, I think I can make that. And then it stacks on top of other things and creates problems down the road. But gosh, yeah, I just, I think this is an issue going forward. And I do wonder how it'll impact the used car market, though, because of all these cars getting repossessed, it might help with used car prices.
It very well could. And here's some more data. Some consumers are starting to regret their new car purchase, considering, I love this one, the average car payment now is around $750 per month, and 20% of loans and leases are now over $1,000 a month. I mean, that's a lot of money. If you're making $80,000 a year, which is pretty reasonable income, having a $750 month payment is pretty hard. We will continue to watch this indicator along with others to verify that we are only seeing a slowdown of growth in the economy rather than a decline in economy. Big difference there. Slowdown in the economy versus decline in the economy. It's important to remember to be careful where you invest. And I was thinking that you were talking about the repossessions. Is there a public company that does repossessions because their business is probably going up?
Yeah, maybe. I mean, I don't know if there's one out there, but hey, it could be beneficial.
I think it's always like Joe, the local guy, that does repossessions.
But I mean, you got to point this out too. I mean, we've talked about a lot of the private market because the thing that we look at here is these subprime loans for cars ended up in private loan deals that were sold as low risk because of no market fluctuation. The problem here is we are starting to see write-downs from publicly traded banks for bad loans. And with private credit, you might not know there's a problem until it's too late, since they don't have to disclose the same info as these publicly traded companies. I mean, we saw JP Morgan, they took, I think it was like $130 million write-down because of
Tricolor,
I think it was. $130 million to JP Morgan is not problematic.
Yeah, they're talking trillions.
Yeah, we're talking trillions. They have trillions in assets, trillions in loans. $130 million doesn't really impact them. But the problem is on these private credits, they don't have to do these write-downs that you're seeing in the public space. So you won't know there's a problem until all of a sudden they're like, actually, we can't make that payment, that interest payment we told you we could because all these loans that we had are now problematic.
Yeah.
You're like, what do you mean? Oh, yeah, we didn't have to disclose we were having problems. I mean, there's some big issues, I think, if there is a continued slowdown here.
And I know you listened to the conference call from JP Morgan Chase as well, and Jamie Dimon and the CFO, I think it's Jeremy
Barnum,
where Jeremy Barnum said, well, yeah, those guys that do the private, equity and loans, they're pretty smart guys. And Jimmy goes, yeah, but they're not all that smart.
and I love Jamie Dimon. He said, when you see one cockroach, there are probably more.
Oh, and that hit the mainstream media too. Everybody's talking about it because that means and Jamie Dimon's very well respected. He is very conservative. He's very cautious. But for him to say that was like, ooh, we need to be careful.
Well, and I just want to point out one more thing before we move on to Ferrari. I was reading earlier in the day, talking about these lending that is done to non-depository financial institutions. They're called NDFIs. This is mortgage companies, insurers, and private asset managers. I was blown away by this. But loans to NDFIs, I think because of the big push into private credit, have jumped by more than 50% year over year in 2025. So again, we're seeing in the public space, but we haven't gotten any news yet out of what's happening in the private market. And if things do start to slow or decline, I mean, you could be faced with some big issues in this private credit market.
And we always talk about the private equity, private credit. Is the lack of liquidity, the high fees. But one thing we never mentioned, which you kind of realize now, is the lack of information, what's going on behind the scenes.
Yeah.
And all of a sudden you're hit with, well, how did they go bankrupt? How did they, Tricolor, how did that happen? Because you never get, like a public company, you get, oh, this is going on and drives the stock down. But private companies, you never hear anything till like, yep, sorry, we're filing bankruptcy. Terrible. Again, if you don't know, you've not heard us for a while, we do never recommend investing in private equity, private real estate, or private debt. Stay away from it.